All right, hey everyone. I'm excited because we have John Carter here, who has been one of the guests that I've wanted to have for quite a while now. So, John, thanks for being here.
Yeah, awesome. It's great to be here, John.
So, anyone who doesn't maybe hasn't been in the industry very long may not be as familiar with you as everybody else that's been in the industry for a long time. You founded Simpler Trading. You've got one of the strongest, I would say, trader education groups in the business in the industry. You have, I'd say, you're one of the groups. You've charted kind of your own course, whereas a lot of people have kind of try to copy everyone else and get kind of overwhelmed by saying, hey, this is what Agora is doing or this group is doing. And you have built, I think, a very stable, strong, healthy business, kind of doing it your way. And so that's what I wanted to kind of dig into is to start off with is let's just kind of quickly walk through your history of simpler training, and how you got to where you are today now.
Sure. And I'll do, I guess, there's a long version and a short version. So I'll kind of do the short plus version, just for, people that don't know. And I always found starting off too, it was always interesting finding out like what are other, people doing because I just didn't know. And the way I'd started was, when I was in college, I was trading. I kind of got the bug from my stepfather, who's a broker. So I was kind of doing options, stuff like that. I had no idea what I was doing. I went to an investors business daily conference. I bought a stock called iOmega, and this was, gosh, this was dating me. It was like in the 95 or something like that. But this is a stock that I remember it went from like 5 to 60. And then I decided to sell covered calls on it. And then, it went to 100. So I just basically locked in a, profit, got out and split adjusted like 6 months later, it was $300. The good news is that I made about $100,000 on that. And, in college, it was like being a multimillionaire at that point. But had I held on, it would have been something like a $1.5 million trade. And so that always kind of got me into this whole idea of what's that fine line between trading and being patient and stuff like that. So anyway, as I'm going through corporate world, I'm realizing that that's not for me. Learned a lot about running a business, but I just realized that, it wasn't a thing. And so as I was trading for a couple of years on my own, kind of ups and downs, I started thinking like, well, gosh, wouldn't this be cool? I'm kind of just sitting here talking to my marijuana. So I just started posting stuff online. And I remember like on Yahoo Finance, and I remember I decided to get a website, and it cost me $25,000 to put together this cold fusion website, and it took 6 months, for a developer to build. It's pretty hilarious considering all the stuff that you get going today. So anyway, fast forward. I think for those of you that know Hubert Centers, he and I partnered up, and that was a great partnership for, gosh, 4 or 5 years, and then we kind of went our separate ways. But he was we learned I think we learned a lot from each other, and we worked really well together during that time, during that kind of sweet spot. And um, and then at some point along the way, so we were just really focused on two things. It was subscriptions and classes. And that was kind of our thing. And I remember, it's like, gosh, if we could just get 100 subscribers and, and the whole idea was is that I knew from my experience that there was a lot of people out there that were working that were either bored of their jobs or hated their jobs. And there's like what I wanted. And so I was trying to provide what I wanted. And when I was in corporate America, it would have been so amazing to have someone to say like, hey, we're buying calls on Micron right now, versus just kind of like, I guess, for lack of a better term, I had no idea what I was doing for a long time. So my goal was just to provide that service and to say, hey, this is what we're doing. This is what I'm doing. Doesn't mean it's going to work or not. Here's an alert, and at the time it was like email, and it was great. And it kind of caught on within, I think the first year of business did like $100,000 that year. 3 years later, had a nice business doing a couple $1 million, and it was me and like four other people, and it was great. And so I think for back like literally 7 or 8 years, I just would call it a lifestyle business,
Hmm.
and and again, I'll shorten this a lot, but then it was at some point it's like, okay, how do you turn this into a real business? And from about 2013 to about 2020, really focused on expanding offerings. Here's some options, learning more about digital marketing, building out a team, which is hard. And at its peak, we got to about 120 employees. I found a great CEO with Brittany Burns. and just really had a stellar team, and that was what really facilitated us to grow. And then we did do an exit in 2020. I still own a third of the company, but I went from being a majority owner to having a third of the company, and that's been a learning experience as well, and just seeing how different people view the business and stuff like that. So I mean that's kind of, and then so the idea with simpler trading was simply like I had built a platform kind of for myself. So what about other styles? And so we'd have like say Hubert Centers or Danielle Shea or all these other folks there that could come in and just they would have a platform instead of I knew how hard it was to sit there and you're doing all the customer service, you're doing all the stuff,
Mm-hmm.
and you're trying to trade and you're trying to educate, and that's hard. And so the idea was like, someone like Danielle could just come in and say, well, this is what I'm doing, and just plug them in. And so the golden was not only serving traders out there, but serving, I call them content providers, so
Right.
that they had a home as well. And so that was always kind of the vision. And, it turned into this, fun and wonderful experience. And now, here we are in 2024, having gone through, we were just talking earlier, like it seemed like it was 2019 and now it's 2024. Like that was a really fast moment of time that was kind of a blur. And now here we are, and the markets, are the same, but they're a lot different. And, what are people looking for these days?
Yeah, so I want to get to that, but I want to kind of, there's a couple things that in your story that I wanted to kind of dig into a little bit more. One is before the exit, when you were looking to expand and everything, I always kind of thought you had a very unique problem, right? And the problem is you're kind of the Bradley Cooper of FinPub in the sense that he's a triple threat, right? He can sing, he can dance, he can act. I remember like, so you've got like an amazing real track record that you could show. I remember you would be able to go on a webinar and you could actually pitch, which a lot of traders can't do very
Mm.
well, like live pitching. You're very good at that. And while you were pitching, you were able to trade, and you would often be making money trading live in the webinar while you're pitching. And like that is not a common set of skills. And you're extremely personable. Like you know what I mean? Like you build a relationship with the people very well. So like didn't you have a like struggles when you're adding other people that your marketing model works super well for you? And it's hard to kind of like follow your act, I would say.
No, that's interesting. And I think it's different for everyone. Everybody, and I think it depends on their background. And my background, in high school, I was really in growing up, I was really into sports. So
Mhm.
baseball, which was a lot of high pressure situations. It's yeah, bases are loaded 3-2. I was a pitcher. And then also I did theater in high school. So you got used to,
Okay.
being in front of a crowd and stuff like that, totally random, right? So that just got me, it was just almost training for high stress situations, which at the time, of course, I didn't know that I would be, utilizing that in webinars. Um, but everybody has their own. What I found is that, is so if you're have services out there, the most important thing is just kind of, if anything that like the acting part gave me was like I can, it's really it's like, look, this is stuff I want to share, and maybe if you did theater, you might be able to share it a little bit more, you know, uh, I don't know, concentratedly, if that's the right
Hmm.
word. But what I learned in acting is how important it is to, like, you really got to be focused. Like if you're communicating to an audience, you have got to be 100% present with whatever, emotion or point that you're trying to get across. And that just kind of came naturally as I'm talking about trading.
Hmm.
If I want people to understand what a squeeze is, if I'm like, looking away and mumbling a few lines, so as I'm doing that, I really want people to understand, like, look, this is really important and it's important. And so that's my theory is how it works. But in working with people, what I've seen too is, um, it's if you're like having being able to present well, it can help, but really it's the material. So
Hmm.
if you're a great presenter and you got shitty material, or the stuff just isn't going to work, yeah, it's not going to last. But I've also seen if someone has got really good stuff, and they don't necessarily have to be really personal about it, but they're just like, hey, this is what works for me.
Right.
Especially, people appreciate that too. But I think but it is kind of a thing where if you are going to go out there and, you know, put your hat on and represent, yourself out there to the world, you kind of want to do it in a way that it's that fine line, because it's like I always joke my life would be a lot easier if I was just trading.
Right.
It's the idea of trading, posting a trade, having answered a lot of questions about a trade, that after a while that kind of is like that can get tiring. And so it's just kind of getting help with that. And so it's that fine line of, it's, look, if you're getting into this business, part of the appeal is, wow, I could, say you got a, when I first started, it's like, well, I'm trading like a $50,000 account, or $100,000 account, but I got another 10 or 15 grand a month coming in from subscriptions. That's great. That means it gives you a little cushion. You don't have to,
Hmm.
worry about a job. And so I think that's the initial appeal. But from there, the only way, customers vote with their wallets. And if you got good shit, they're gonna pull out their wallet and pay for it because you have stuff that's helping them. And if it's not helping them make money, so why are they there? So I guess, it's kind of a long answer of,
Hmm.
I've found for people that come on that may, if they're not personable, that's fine. But really hone in on, how is it what you're doing? How has it made your life better? Like, you've traded before, and if it was like, really hard and stuff like that, a lot of other people are going to experience that too. So what are you doing that's making it easier or
Hmm.
making it less emotional, making it less taxing, just things like
Yeah.
that.
Yeah, that makes sense. And with that, like your like what's your product model look like? When you say subscriptions, is it a an educational subscription? Is it a trading service, or is then you have a lot of courses? So what's your product model kind of look like?
Yeah, so there's a couple different things. So I would say like our core, we have called what's called a simpler central room. That's kind of our core room, and I would think of that as, like the hub. So
Hmm.
here's the central, literally, and we kind of that's where everybody kind of goes initially. And in there, I'll be in there. We've also got, a dozen other traders that'll kind of come through. It's almost like a TV station. Like from 2 to 3, you're gonna have Trendy John. From 10 to 11, you're going to have Sam. And so what'll happen is as a trader, they'll come in. And the idea with that is that I'm a strong believer that you got to find what best fits your own personality in trading because there's a
Hmm.
lot of different ways to trade. So, do you like to scalp? Do you feel better, position trading, just kind of finding that sweet spot that, you're not getting too taxed on your emotions, but you're able to make a living doing it. And so by doing it this way, then everybody kind of go in there and kind of get a sense of, who resonates with them. All right, so that's a subscription. From there, though, if people really resonate with Henry, well, Henry's got a service. Or if they resonate with David Starr, David's got a service. Here's something that's more Elliott wave based, and here's something that's more selling spreads. Here's something that's more aggressive and directional in the futures markets. So, like with JR, so the idea with that then is there's a central subscription, and then from there there's all these offshoots. So I think we have about like 10 different subscriptions.
Okay.
And and a lot of people, they get more than one and things like that too. And then from there, the two main things are kind of education classes. It's like, hey, here's and not so much here's an iron condor because you can Google that. It's here's an iron condor and this is when you do it. So you wait for these
Hmm.
three things to happen, and then this is a much higher probability setup to do an iron condor. And so that's really just kind of um, it's the when. It's when is this an appropriate tool to use? And so people, and that's something I think is super important. And then from there, it's tools, just tools that can help. And I've things like the squeeze is something that I've known for, like quick hits, and it's just things that here's something that makes trading easier. And I find sometimes because the financial news can get confusing. I'd say bad news,
Hmm.
is it good news? Yesterday Meta released earnings and they're okay, but it got annihilated. Okay, and so and I see people ask questions about that, and it's like the news doesn't matter, like it's totally irrelevant. And so we kind of have this joke. It's like just kind of follow the pretty colors, and that's where the tools and things come in. The things that we don't do, and this is more, we used to do more live events, and we haven't done those. We maybe do one a year now, just because it's a heavier lift. We're so plugged in
Hmm.
online, to actually, go somewhere, set up a computer and all that kind of stuff. It's just easier to do it online, but it's also fun doing live events because you get to actually interact with people and things like that too.
Yeah.
And we used to do more one-on-one mentoring, but again, that's kind of hard. It got at some point that got harder to do. When we were
Right.
smaller, that was easier to do.
Yeah. And so you have quite a mix then a product then. You have, the rooms, the subscriptions. How many tools do you think you have at this point?
80. It's like
Wow.
over the years. So there's over the years, it's like and it may be something as simple as, hey, here's some lines on a chart that plot out, you know, the expected move in these options over the next 10 days. And that way you could
Mhm.
visually see that. And so it could be something like that. Um, a lot of support and resistance. It really comes down to momentum oscillators and triggers. And it's just, finding that's going to be a little different for day trading on futures versus, say, swing trading on a daily chart. And so it's just kind of finding things that, that work best on those time frames.
Yeah. And I also noticed that, and you have a fantastic copywriter, Craig Perrine.
Yeah, Craig's awesome.
Your copy approach is, I would say, sedate's not the right word. You're more conservative. You're more authentic, I guess. You're not doing because it doesn't seem to be as much of the, oh, here's a crazy big idea, kind of
Mm.
promotional stuff. It's much more, and maybe that's a function of trading, the way that you offer it in the education. But how do you think about promotion? Um,
Yeah, it's a good question, and it would probably be easier if we did, say, two big promotions a year, and really spent months mapping it out and kind of more of a big idea. But I'd say our promotions are more kind of nuts and bolts. This is hey, we've got um, the market has changed a little bit. It's a little bit more sideways. Here's what's working best in this market, and so it's not necessarily like this super exciting thing, where it's like, you'll hear like, oh my God, this $5 million webinar, but it can be break into the the lower seven figures or mid six figures.
mhm,
And those are important because, with something like that. So I would say, when you have a company, you've got overhead and stuff like that too, but the, I would say that the subscriptions kind of pay for the overhead, and then anything that's above and beyond that, it's going to be something like classes or mentorships or different things like that.
mhm,
And it's I go back and forth because it's like we've thought about different things where it's like, there's a dozen services we've thought about launching that we ultimately didn't, just because we know how much work it would be in terms of, um, if we're going to do, like, say, a scalping service. All right, well, that means someone's going to have to be there, you know, 24/7. We're going to have a room manned almost 24/7 to capture the overnight sessions. It's going to generate a lot of questions from people who are newer. And so you kind of think through what's it going to take to fulfill it too.
mhm,
So swing trading is certainly a lot easier to fulfill than that. But I think one of the things that we do different than a lot of people is that, our alert services are kind of live. So as we're placing a trade or an alert, you might have 1,000 people in the room all asking questions about it versus
mhm.
just kind of, shooting it out. So it's harder work, but people appreciate it. And so I always try to think of, I try to remember myself when I was working in corporate America, what would have been a nice service to have.
Mhm.
Um, an alert service just by itself is okay. But I remember, like, I'd have questions like, well, why are you doing this? What
Right.
makes you think this is attractive? And so we try to do that as well.
Yeah, and to me, it's almost seems like you have a cultural difference than some other groups in the sense that a lot of times, the publishers will be somebody who was a marketer or a copywriter to some degree first, and so they are, their first thought is the promotion, and sometimes the editorial and the copy and the analysts, run second fiddle to that. Whereas you've definitely got an approach of like your customer first, trader first, like what's going to actually work. So when you're talking about the the just the issue of like, oh well, to fulfill this correctly, we would need a 24-hour room and somebody in there all the time. Some other groups that I've seen are, well, they won't go that far. They're like, well, we can sell this. How can we cobble together a product that is functional enough to sell? And so you seem to have a different culture, and maybe that's because you are the an actual trader who trades, and like but your approach to it is, um it sounds to me like it's trading and you add marketing on top of it versus we are marketers who are going to just choose a trading product because we think we can sell it.
Yeah, and that's a good distinction. And there's pros and cons because I know a lot of times, we'll put up ads that next to what I would call more marketing ads. And if someone's coming into the market for the first time and they see our ad next to somebody else's, they're probably going to go to somebody else's because it's a sexier ad. It's 98% win rate and blah 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 blah. And we find that a lot of times people come to us, we're their third or fourth service that they've tried.
Hmm.
And then they finally feel like, oh my gosh, we got a home. You guys are really trading and things like that. And so, there's pros and cons of that because we kind of have to, we're not going to get as, um, because we deliberately choose what I would simply call reality. And the
Hmm.
reality of trading is nobody really knows what's going to happen next. There's setups that create a higher probability of one thing happening over another. And I think the latest kind of hot craze right now is algos and algorithms. Um, which are I think there's some really good ones out there, but at the end of the day, it's the same thing in terms of, yeah, algorithms are going to work great in a certain market, and then if the market changes, the algo dies. And so you've got to, if you're doing that, you've just got to have enough market experience to know that you got to change gears when that happens, or b, this great algo that worked in an uptrend, and this whole business is built on it'll just die if
Hmm.
you don't have experienced traders. And so I do think it's important that you have people, even if you're a marketer and you're like, man, I've been trading for the last year, this is awesome. For the love of God, bring someone on that's been trading for 20 years. They don't even have to be a personality, but just so you can kind of bounce ideas off of them, because they've seen, nothing that's happening in the markets is unique. It's all happened before. And I think part of just having been around a while is you really just kind of get that reality check. And while it's not as
Hmm.
sexy as some of the ads that are out there, um, there's definitely a segment of the population that resonates with, okay, let's just keep it real. We're here
Yeah.
to, um, you know, if this was easy, everybody would be doing it. So let's do this in a way that's, and it's so important to me that you create a community. Like, trading is a very kind of isolating kind of a business. A lot of times, if you had a bad day, you don't necessarily want to tell your spouse about it, but you can tell the other people in the room, and they'll understand. And so, but I do think it's really just, it's kind of like if you're a scuba diver, and if you're really passionate about scuba diving, you don't need some glitzy brochure thing. You're just kind of like, oh yeah, I want to go, I've always wanted to dive. I always want to go diving in the Philippines.
Right.
Here's a cool company, that's doing it. Let's go. You don't have to get sold on it. And so I think that's just it's an important thing.
Excuse me. Sorry. Um,
Yeah. Is that long COVID effects?
no, thankfully. Um, well, actually, I think like the on the issue of like, oh, is it the pros and cons of aggressive marketing? Excuse me. Sorry. I think more and more people are starting to realize that you build a better customer base with kind of the less hyperbolic approach to marketing,
Mm,
because you have a lot of volatility, a lot of things coming in. Um, but like that, if you're trying to think of this in terms of long-term value, like, or lifetime value, like the customers who come in on like who man, I burned out three other places, they suck, and I finally found my home. That guy's probably going to stick much longer. Having a community, building that customer base that's like actually there for the things that you represent and the culture that you have, like they're going to stay longer. And I think that and I've talked to a lot of people who were major players, either the publisher or one of the top 2 3 marketers in the groups that were 2 300 million, and almost all of them at this point are like, I think maybe 50 30 to 50 million is probably the right size for a pub, not much bigger than that.
I would totally agree with that, because I think to get to a couple 100 million, and I've talked to businesses that have done it. I mean, we've always kind of, that 30 to 50 million has always been kind of a sweet spot. And I think, to get beyond that, you do have to, there's things that you have to do that, I think, you know, are a little above and beyond kind of like what I would say is like, okay, we're traders and we're trading. Um, and I think that's something where you kind of feel that pressure of, okay, we got to come up with some big idea. And then all of a sudden, it can kind of start to veer towards snake oil, or it can start to veer
Mm-hmm.
towards, you're either at the two things I've seen the most that we really try to shy away from is, one, it's a fear mongering. The world's coming to an end. You got to buy silver now, at the bargain price at $35 an ounce. Never mind that they're mining a billion ounces a year, right? So, or all the claims and all the conspiracy theories, to me, that's just manipulating people, and at some
Mm-hmm.
point, people get tired of it. The other thing, but but it's a good front end. Fear sells, right? We all know that. And then the other thing is that, who are you attracting? And if you're attracting a client that's got $200 to trade and they're going to be really high maintenance, that's not worth it. That's just not worth it at all. And so it's kind of, I kind of like the filters of, who's not going to make it.
Hmm.
Who's going to look at us and say, oh, that's not for me. I'm looking for something, I'm trying to turn $200 into a million. That's not great. Go do that, go try that somewhere else.
Hmm.
So I think it is kind of really thinking through like what's the customer that you want, and then from there, what kind of company and what kind of culture do you want? And it should be something that's, I always found that it's like the more traders that you have in your company, the better, because then everybody is aligned and everybody understands, what the client's challenges are and things like that too. So, if they call and they're frustrated, they're like, yeah, hey, I get it. I was in that Google call too, and it didn't work out.
Hmm.
So it's really just, it's kind of it's a trading culture, and just wanting that to permeate through, that they understand like what the hopes and dreams and fears are of our clients,
Hmm.
because man, you get really passionate about things like not only is it money related, um, but success in trading means so much, and failure in trading is there's extremes of more than about anything. If you're in a job and it's not really that exciting, you can find another job. But man, if you succeed at trading and creating a consistent income, that opens up a whole world of interesting possibilities. And then if you fail, not only is it frustrating, but it really crushes like a very big dream. And so I think it's just important to have a team in place that also understands that and kind of embraces that.
Yeah. And the last few years, like you go back to 2019 to now, we've had a lot of things happen. We had COVID, and with COVID, the trading boom, kind of the
Mm.
investing trading boom that happened, and then we had a pullback after that. That industry wide, I would say, is probably the worst since 2009, 2008, 2009. What's been your experience of that, and kind of what how do you see the state of things right now in the industry after that kind of
Yeah.
time?
So yeah, and I remember 2008 very well. And we were a much smaller company then, but I remember, revenues fell about 30% and it took about 2 years to recover. And, um, the difference then, so with 2008, the difference with then was that you didn't have suddenly a bunch of new people trading. You had a group of people that had been trading for a while, and then 2008 happened. And I remember that was actually a fun year to trade, but not everybody was prepared for that kind of volatility. Okay, so what's the difference this time around? This time around, you just had a bunch of new people come into the market. I mean, how many millions? I don't even know. But all of a sudden, everybody's at home. It's work from home. Everybody's trading. Boom, 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 boom. So when that party came to an end, I know lots of friends who like leveraged up, and they had $100,000, and it's like $1 million gone. And when the downturn started, they kept their margin in place, whether it was Bitcoin, different stocks, all those things. And so the things that I've noticed this time around, what the two things that stood out to me is one, how many people that came into the markets that had never seen a prolonged downturn. So they didn't understand things like shorting or, stop losses. It's, it'll come back. And so that was super delusional for a lot of people. So that wiped out some people. But the other thing that happened from there is that you've got a group of people now that they got their feet wet and they loved trading and they want to learn about it. So now it's kind of like, all right, so they want to learn to do it the right way. And so what I've found, I'd say a slight difference now in kind of the general market in terms of traders versus say 10 years ago is that there's it's kind of this almost done for you kind of a thing. They're like, okay, I get it, but I don't want to spend the next 30 days learning how to set up these charts and understanding, I get the idea. Can you just send me an alert? And I've seen that more and more, because alerts have always been popular, but I've just found more, done for you kind of like, yeah, I love trading, but I don't know if I trust myself, emotionally to handle these ups and downs. But if you could just say like, all right, you know, you're trading $100,000 account and we're going to buy $5,000 worth of calls. That'll help me, understand position sizing and stuff like that too. And so that's one thing that I've seen.
Mm-hmm.
Um, And, and from there, it's almost kind of like being a sounding board to kill bad ideas. And, it seems like once a week I'll have someone going like, is this a good time to buy Peloton? I'm like, it's never going to be a good time to buy Peloton, right? If you play on the junk pile, you're gonna get tetanitis or whatever. So it's really just kind of, so the idea of helping people pinpoint like this is a good opportunity, but also telling them what not to do. It's almost like you know whether a trader is successful today or not is what they learn not to do, and also being able to tell them that like, hey, yeah, don't but that's probably the biggest thing is we'll get is just fending off questions of people like, well, do you think I should load up on, should I buy a bunch of calls on meta right before earnings? No, because, it might work, but it very highly probability won't because of this, this, and this. And so I think it's almost like a mission to save people from themselves in a way.
Mhm.
And, trying to just finding other ways to do that.
Yeah, that makes a lot of sense. I think that so do you think that the we obviously had a huge amount of people who came in, and so like for you guys, what do you think like the rough percentage of people who kind of like are still here from that 21 kind of boom?
It's good. We definitely had saw the same. It was kind of similar to 2008. I mean, we kind of, came down about 30% and then, kind of started to bottom out and turn back higher again. Um, I, I think from what I've seen is that, even the people that say lost money and they're kind of out of the game for a while, they got their feet wet though. It is still kind of um, and you're seeing that now. What I'm seeing right now is you can kind of tell a lot by just when you see like record volume and options. So that's one
Mm-hmm.
thing, SPX and all that kind of stuff. And when you see stuff like that, there's a it just shows you like how much interest there is out there and how much activity is out there. And now the question is, okay, are these people, how many of these people are doing it on their own?
Mm-hmm.
How many of these people are on someone's Discord that they saw on TikTok? And then how many people have found a real community? And there's
Yeah.
rooms, there's one room, a guy that I follow, and he will, it's crap room, but it's great information. Like it's old technology. There's no screen share, there's no audio, but it's great because it's a group of real traders doing real
Mm-hmm.
things. And if you're a new person and you go in there, you're totally lost.
Right.
But that's the kind of thing is just, you want to kind of find these, you can't be all things to all people, in this market. You got to really say, okay, you're an experienced trader. Here's your home. You're a noob, here's your home, and just kind of
Mm-hmm.
making sure that that's clear from the outset.
Yeah, yeah. I think that one of the things and I had this in my state of FinPub presentation that really struck me was that the when things kind of started to go soft for this industry, for that period, that pullback happens, but retail investor participation in the market continued to hit record highs. And
Mm-hmm.
so you can see like the participation in the market explodes during COVID, and then it stayed high. And then a lot of FinPub kind of has all kinds of things, all kinds of problems. People pull back, and I wonder if it's because so many people dove into all of the kind of aggressive stuff,
Yeah.
and
So,
and we're disillusioned maybe. Uh,
I think there's a couple of things there is what at least I saw because there's always that, everybody's a genius in a bull market, right? And in
mhm,
2020, 2020 was a great year for trading. And at some point, the music kind of stops. And 2021 was a pretty good year as well. But when it really kind of things change, and really, I think the one thing here that, I don't hear people talk about, but, there's a fundamental change when interest rates go from a quarter of 1% to 5%, like in 6 months or however long that happened. There are so many things that impacted, and it could be a distraction to, oh my God, I got to get a mortgage to, that's gonna things are, at somebody's company and stuff like that. But low interest rates facilitated a lot of excess, and including attitudes, ideas, because it was always, you're always like one week away from a new home run because some other asset was going up. So you might have lost it in Google calls, but you made it in Ethereum, and so
mhm.
when that party ended and all assets came down and everything got tighter and everything got harder and the government wasn't handing out money, that was the difference there with that is before when people lost money, they could refund their account, like
Right.
whatever, I'll just refinance my house, blah, blah, blah. that just all shut down. That's a big, it's a big thing.
Mm.
I think a lot of people just didn't realize that. So that was a big thing. And then from there, if everybody, if there was no guidance, if whoever you were following just didn't know, like there was a lot of people out there that had services that had been trading for 2 years. Great, they're doing awesome if they're buying the dip on Tesla, like they're killing it. But if they're buying if they're buying the dip on Tesla from 400 all the way down to 100 or
Yeah.
150, and everybody's blindly following along. So one thing, you realize after a while is people don't really think for themselves. If you're
Mm.
buying calls, you might think like, well, I've literally had situations where I'll place like a target of like $7 and it'll get to like 690 and start to drop. It's like, all right, guys, just take it. But there will be people there that's like, well, you said seven and it's at $1 now. So, and I was like, and so you got to just really people how literal people are on that. And so it's just it's just really it's almost over explaining, like, hey, the market has changed, we're below this, buying calls on the, this is not going to work anymore. And so anyone that I think walked them through that process was like, okay, yeah, this is not going to be as easy as it was, it's changing. That's a whole different experience than
Mm-hmm.
someone who's never experienced that before, and they're just like, yeah, it'll come back, guys, don't worry, it'll come back, it'll come back. Oh my god, 6 months later.
Yeah.
That just wipes people out, and and
Yeah.
you lose trust.
Yeah. And that's where like it's interesting, like when I talk to a lot of marketers and copywriters on the publishing side of stuff, that like Patrick Bouvet had brought it up too when I talked to him. He was copy chief over at Legacy at the time, and now he's back at Stansberry. That interest rates were um, a big cause for everything going down, because all the ways that it affects everything. And then when Matt Ward and I posted a video about with after the Fed was like, hey, we're not gonna keep raising rates, we're gonna cut rates this year, and we're like, oh, this is gonna be rates go down, we're gonna have a boom in FinPub, and now we have everybody having kind of their best months since 21. And my point when I talk to some other my friends in the industry is like, if interest rates affect FinPub this much, then all the things that you're writing about, how much is it affecting those things? And if you don't understand like just the basics of interest rates, like how can you talk about the markets effectively? It's great when everything's exploding, like when the world, everything's going up, but like we're not in that environment again. And uh how do you even think about this from an idea perspective if you don't even have that in your calculus, right? um
Yeah, and I think the other thing is, we were talking earlier about how interest rates impact, but clients that a lot of clients that are wealthy and have, say, investments in apartment buildings or commercial real estate, some of those went to zero. If they just own, if they bought near the top and stuff like that.
mhm.
And so when there's asset prices rising and everything's going up, people can always get cash again. Oh, I blew up my $50,000 account. Great. I'm going to come over here. I'm going to get it again. But that situation can change a lot of things. Now, I think at some point, and this is how I think this is going to go down, is that we are going to see kind of a 2008 style real estate correction in. I, I mean, I would say these cycles, they 68% of the time they work 100% of the time, right? So let's say it plays out as it has over the last 300 years, every 18 and a half years. So that would mean that this next real estate 2008 cycle is going to be 2027. And then we're going to see interest rates cut, probably back to, less than 1% again. And that's good, because what happens then is, you will go through a process where all assets rise. Well,
Mhm.
we don't know. That may or may not happen, right? That's how I think is going to happen. But I also like to just tell people, like, the environment's always changing. And if you're in an environment with high interest rates, just wanting to understand in terms of trading, I think it becomes even more. I mean, I think one of the things, I guess, if there's a selling point when there's high interest rates, is how important it is just to have a steady income to offset debt payments and things like that too. And it just becomes more and more important to look at trading as, it's like, how can you do this in a way where it's not this emotional, I always joke, look, every trade doesn't have to be this journey of self-discovery. You're like, oh my God, it's the ups and downs and stuff like that. But it's helping guide people through that. Like, it's just a way to, if you think of it in its most simple form, it's just, we're just showing people how to be Walmart. Memorial Day is coming up, and there's gonna be a demand for hot dogs. You can sell them for $3. Great, buy them for $1 now, and then in 3 weeks you can sell them for $3. Versus, I think I see a lot of people coming to the market and they're like, "What's the hot stock of the day? I gotta SMCI is going up. I'm gonna buy calls." Well, it's great when that works, but when it doesn't, people lose everything. They just
Mhm.
don't understand that when the game changes. And so part of it is, I think, is our job is learning, is just educating people about that too. And that doesn't even have to be a class. That's just, hey, here's free information that it's just part of the benefits of hanging out with us is that, yeah, we're going to give you some trades, but also kind of educate you on the lay of the land and kind of how things work and stuff like that too.
Yeah. So are you then fundamentally bullish on trader education as an industry
Yeah, I
at
I
this point?
am. I just I think that the big, if there's a reckoning on stuff like this, is that it's the we were talking earlier about, it's this kind of like, what's the for it's all hat no cattle, right? If you gotta and you've got to really be doing something that is working and sharing that with people versus some great there's a lot of things that look great. If you can really hype them up, they're going to sound pretty amazing. And maybe that's something that works in a specific environment, but if it stops working and you keep pushing it, you just lose credibility. And so I think it's, if anything, what 2023 taught a lot of people is to learn how to be more discerning. And so I think that's um it's, you got to pass the sniff test. You got,
Yeah.
it's so tough because you got to look, we all know with marketing, you got to get people in the door. And it's and I always say, like, look, if we can just get people in our door, we're doing them a favor. So we got to have something that, it's in terms of marketing, that's something that's real and true. But you got to,
Grab
what's
attention.
that? Yeah, what's that fine line? Kind of the psychological things to kind of at least get them to cross and give it a try, right? And but at the end of the day, you got to have stuff that's, and it doesn't have to be, you don't have to have stuff that, I think contrary, it's like, you don't necessarily have to, like, oh my God, we have this great trader and he or she is doing all these great things. It doesn't have to be that so much. It's just more, here's, actionable information of, going back to like what not to do. I mean, almost just, just kind of being able to, tell people, like, things like that too. So I just think it comes down to, it's just, for people that are genuine and wanting to share, and they've got some, market experience to back it up, and they're not this, blowing smoke. I mean, I think that's, if anything, that's going to be the kind of those are the ones that'll keep on going. And, everyone else will kind of have their booms and stuff like that, but, they'll bust, once everybody kind of gets an idea that, the stuff doesn't work, doesn't work that great all the time.
Yeah. Yeah. And so let's switch tracks for a second here. You mentioned that you sold 2/3 of the business to a PE firm. I remember talking to Brittany Burns when she was CEO, and she mentioned, like, I think you guys talked to something like 70, 73 or something different PE firms before you found. Um, Walk me through, like, why you decided to exit that way, and then what that process looked like for you, and then how it impacted the business with a PE firm as a partner after the fact.
Yeah, so it was interesting, and I think we thought about this maybe in the early 2020, and we just kind of thought, all right, we've been having some nice growth, and we've been joking about, let's build a real business, let's build out a team. And so then what's the end game with that? Is it something where, and so I always thought that within our skill set internally, we could build a business, a 30 to $50 million business. Like beyond that, I didn't know how to do it. um it's I think there's just, at some point, you kind of know your skill set, your niche, and you kind of build something up that would make sense for someone more experienced to kind of come in and help out. So that was kind of the idea. And so we went through, and so what we did was we found a kind of a small boutique investment banker that kind of knew the space, and we spent about a year, from the time that we first talked to them to the time that, we ended up closing on something. It was about a little over a year, 14, 15 months. And the idea with that, if nobody's ever gone through it before, but it's, what's nice about this is that the IB investment banker, they'll put together materials and like a teaser, and then just kind of like, hey, here's our story. And then boom, they just shoot it out. And we had, yeah, I think it was 78 NDAs to sign that that were firms that were interested in. And then that got down to about a dozen, that you're talking to.
Mhm.
And then you kind of narrow it down to about three or four where, everything kind of clicks and everything kind of aligns. And we didn't know during the whole process. I mean, one of the things was like, okay, we have no idea, would someone even be interested in this? And at the end of the day, we were completely fine continuing to run it. And so I think, and that's important. Like you want to, if you're just looking to get out, I think that's a different kind of a thing. But
Mhm.
I wanted to stay a part of it. I was want to roll equity into it and stuff like that too. Um, and then in the changes, so I always say it's always nice to have kind of adults in the building. And so one of the first things that started changing was our tech stack. So when you bring on somebody like that, they just have experience in a lot of different industries. And so immediately it was like, wow, here's some things. Let's get you a much better tech stack. And that was great because that's not something that we really knew how to do. And that's been fun. And then the challenges are, it's just that you have, and I think this is with any, venture or private equity firm, is that they'll have a financial model and they'll look at the financial model and says, well, and there's a story of another industry I know. I know, and this guy, he had a widget, he did, like hardware. They manufactured things for like Lowe's and stuff like that. And they sold it to a private equity firm. And there was this one product that was kind of they didn't make much margin on. And I'm just making up numbers here, but they were a big
Mhm.
business. They probably did 100 million in revenue. And then here's this one that did 15 million in revenue and it only had 10% margins. So they're like, oh, let's just get rid of that. And the guy's like, we can't get rid of that because if we do, that's going to impact. That's why Lowe's continues to buy from us because we do that from them. And so we'd actually lose all this other business. They're like, oh, no, no. But the financial model says if we cut this one out, the EBITDA is going to be, the margin is going to be that. So the one thing I found is that that's something just to be, that just I've had to like kind of look at and say, no, 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 we can't. I know the model says that looks good, but we can't do that. And so I've found that, but it's good getting ideas and hearing like how other people view the business,
Mhm.
but also, really just making sure it's like, okay, we can't, it's like, something like, we can't get rid of our free trial. We can't get rid of our dollar trial. If we get rid of the trial, the amount of new people that are going to come in are going to. So I did, I find that I have to really kind of, I call it dance with the financial models
Right.
because there's financial models and then there's reality. And the only people that really understand the reality part of the business are the ones that built it because they understand the nuances, they understand all the levers, they understand that, if you do this today, that's going to be a sale 6 months from today. And I think that's something that sometimes can get lost, in the model. And so that's
Mhm.
what I've just found is that it's more, and some of that though, some of that modeling out has been interesting, but a lot of it is also kind of, it's like, okay, I know that looks great on the spreadsheet, but this is how, when there's a person out there and they're trying to wonder what call to buy, this model is not answering that question, right? And so I think so it is kind of it is interesting to look at. So we've gone from, I'd say, an organization where now our tech stack's a lot better, our reporting's a lot better, our KPI dashboards, all that. I mean, wow, pristine. And then, really now just kind of, making sure we're backing that with what I would call more intuitive, like, hey, this is how the industry works kind of thing.
Right. And that seems to be, would that be the one of the issues, I guess, would be that there's not a lot of comps. It's a very niche industry. It's a very kind of specific thing. So that you're not going to find a lot of firms that have a lot of experience running companies in this space, I would imagine.
Yeah, I would say that there's something to be said for, industry knowledge and experience. And it was great because the firm we worked with, they do have experience in content, so they understood that part of it. But I have seen situations too where, it's someone that doesn't understand the industry at all. And yeah, they just don't kind of understand it. And so that ends up being a business, and we've bought kind of smaller businesses and stuff like that. But I always find it's nice to find one where, you've got someone that understands their business, but they're just overwhelmed with all the work. And so, and that's kind of a perfect kind of a niche there. And so I think, with us as we're looking at partners and stuff like that too, it's always, all right, is this a group that, they do this. They may not do it exactly like what we do, but they understand the client is looking for very specific things and things like
Mhm.
that too, and that just always makes it so much easier.
Right. So you are in like kind of an acquisition mode yourself then.
Yes, and so we've talked, and mostly it's been on the smaller side. We've talked to some, that would be bigger ones too, and it is kind of finding that it's a combination of, all right, are they doing things that we're not that we'd like to? So, as an example, I like the idea of what I just call algo trading. Um, and that's not our area of expertise, but it's like, okay, we can go partner with these guys because that's what they do, and we can bring in some of our ideas. Awesome. I think that's kind of a,
Mhm.
perfect type of an opportunity there.
Nice. And then with the PE firms, was there anything that like that they brought to the table besides like saying, "Hey, let's upgrade the tech stack," but like in terms of a view of the business or the industry that you thought was like surprising in a kind of a positive way, like a different perspective on like what it is or what you do that maybe you hadn't thought of before?
Well, one of the things is that they were really able to kind of analyze kind of the data in a way that we hadn't been able to. And just something like, so one of the changes that we did was, I always used to like push for like, let's just do monthly subscriptions. It's just easier. In terms of cash flow, it's predictable and, all that kind of stuff. And then they really came in and started pushing like, let's do annuals because of this, this, and this. I personally didn't like, okay, this is, I'm not really a fan of this idea, but it was a good idea. And, it's just, and I think it's just things like that where they could look at things in a way and just say like, yeah, you're in the weeds. So you may not know that if we did this, this, and this, this would make some things a lot better. And so that's been
Mhm.
helpful, kind of just having what I would call professionals being able to kind of look and analyze things in a way that, I never, it was always kind of like we're in the weeds and I think we're doing pretty good. And oh yeah, here's the monthly P&L. Great. When's the next promo? And that was kind of,
Right.
versus just kind of, doing things like, just more I guess what I would say really deep dive advanced analytics and things like that.
Mm, nice. And then on the like kind of with your place in the industry, I guess, you have a lot of relationships. You do partnership kind of work, like affiliate work and other things with people in the space too, don't you?
Yeah, and we always try to find it's always we used to do a lot more affiliates. Gosh, in I guess 8 or 10 years ago, we were really heavily into it. And we still do. It's and that model's changed a little bit, right? But it's like it is kind of nice where if you have someone, especially if they're really good at marketing, they've built up a database. Our products are really good and they convert, and that's something where if you kind of find the right match. The tricky thing is like if you find, if someone else out there has a product too, it's just trying to find like ones that are complementary to each other.
Hmm.
So we've found, a couple groups like that where it's just like, yeah, we promote their stuff because it's great. We use it. And then, and vice versa. And that's, I always think is kind of perfect because it's just like, hey, we found this tool and we're using it. And great, we'll reach out to them and to say, hey, would you like to do some kind of a swap or
Hmm.
cross promotion because your stuff's awesome. And, our clients would really like it.
Yeah. Yeah. And so tell us about your farm, the ranch, because I love seeing the pictures. You got zebras, you got what kangaroo, like you have everything. It's a full blown safari out there.
Yeah, so we have learned a lot during this process. So there was a time about a year into COVID when nobody was flying, um, and I was talking to my wife Maria, and we had this we call it the Tesla Ranch. I had some really good trades in Tesla over the years, and pulled that money out of the market, and got like 300 acres out in Wimberley, Texas, and it's just you think of Texas as like a desert, but the hill country, there's hills, there's lakes. It's a really amazing place. It's very similar to South Africa in terms of climate, and we'd visited there a couple times. And so I was sitting there and we thought, gosh, we may never go to, and we're going to Africa again. Oh, we haven't been since, since COVID. And we just thought like, we've got this deck and it overlooks this field. There's a pond. Like, wouldn't it be cool to just see some zebras and wildebeest out there? Ha ha ha. And so one night, I probably had a glass of wine and just looking online, and there's all these Texas ranches that have all these things. And so we ended up with I think 12 different species of, you got kudu zebra, wildebeest, nyla, sable, oryx, all on and on. And then got some kangaroos. The guy that I'd work with, he brought over a tiger cub. I'm like, no, this is not going to be a Tiger King situation. He brought over some monkeys. Like, no, I've already got three teenagers. I don't need any more. Um, but but the idea that we could just go for a hike or sit on our porch, and it's great. I almost got a giraffe. And I'm so glad Maria had this great idea. We went and visited a giraffe preserve and stayed the night. And it's like, okay, that's a lot of work. That's a no-go. Um, but these are zebras, kudu. You don't need to. They just eat grass and drink water.
Yeah.
They're pretty low maintenance. And yeah, and so that's been awesome. And the issue is things like, the first zebras we got, they were on our place for about exactly 5 minutes, and then they just jumped the fence. Like we didn't have a high enough fence, and so I had to get a drone. And every day for 3 weeks, I would fly this drone like in a 7 mile radius looking for them. And I finally found them 3 weeks later, and they were in this field about a mile away. And I called the owner up, and just this big ranch, and I said, hey David, this is John. Man, sorry, my zebra is on your place, and I'm gonna build out a high fence, but I don't know what to do. If can I just? He's like, you city slickers. It was pretty funny. um, but yeah, so we learned a lot. We lost one because you can't have like goat poop has some kind of a virus that'll kill like bongos, or like we
Hmm.
lost a bongo to that. But it's been great. I mean, it's been a really good, it's been a fun experience with the kids. It's amazing on
Sure.
on the weekends going hiking, and you or go around a corner and there's some zebra, or we've had some kangaroo babies and stuff like that. And yeah, it's been fun.
That's very cool. That's very cool. So I guess like with where things are now, like what are you guys thinking next is for you guys? Like what you're kind of at a great size. Uh I guess you're gonna grow incrementally. Like what's the kind of approach now with the market coming back the way it is?
Yeah, a big part of it is just it's really talking about what people, there's things that we'd like to do, and then we'll talk to our clients, and it's just like, what do you guys want? What are you guys looking for? And there's certainly a lot of interest in, zero DTE, SPX, and stuff like that. And we do some of that. But there are markets where, we tend to focus more on kind of swing trading, where you hope, holding something for kind of maybe a couple days to a couple of weeks. But there is an appetite for that for more shorter term stuff.
Mhm.
Um, so we're thinking of launching a product, around that. We've got, um, you know, I don't know. Live events are great just because it is fun to kind of get out and kind of mingle with people versus just staring at screens all day. Um, there's a great place in Austin to do it because you can do it at the college and you get like stadium seating and stuff like that. So we've done that we may, thinking of doing maybe a bigger event like that.
Mhm.
But mostly it's just more, what are ways to grow that's partnership based, like, okay, let's partner up with this broker, let's really kind of dial into the needs of their folks, and can we help each other out. um and and so sometimes that will, a lot of our services are, I would call, a lot of hand holding. And it may
Mhm.
be something like, okay, well, here's a service, there's no hand holding, here's the alert, good luck. And so it's just kind of looking at different things like that. Like what's, not only is like, what is it something that people want, but what is it, how is this going to be fulfilled? Is this going to be
Mhm.
something where, and I personally, I got three kids. I like to travel. We take time off. And so I personally can't dedicate to like, okay, here's a service I'm going to do every day for the next year. But, if I'm taking a trade, I'm on the road and I get an alert, can I send that out, along with five other people that are part of that alert service? Yeah.
Right.
So it is kind of looking at what are some things in this market? You kind of like follow the volume, right? Where's the volume? Well, gosh, you got a ton of volume and options. It continues to grow. Um, I think automated trading systems are interesting. That's a rabbit hole though. It's that's something where, just gotta, it's an easy rabbit hole to go down as well. But I think the idea that, I'm a big fan of things like, like Tasty Trade and Tom Sosnoff and things like that, and the way they do things. And
Mhm.
it's really just kind of finding ways like, it's finding services that people would actually want. But at the same time, we're all businesses. And so it's doing it in a way that's economically feasible too. If you do a service for free, that really, it's tough because it's, you're having to, I personally, because people have asked like too, it's like, well, if you're just teaching, why don't you do it for free? And it's like, because you go back
Exhausting.
to, yeah, I mean, nothing I have to explain to you, right? It's just more about, but it is more about like, how do you want to spend your time? I would rather say, do you want to spend um, time with 100 people that are in a room that are paying $9 a month, or 10 people that are paying $90 a month? Absolutely the 10 people. It's going to be higher quality. It's less running around and stuff like that too. And so I think a lot of it is just wanting to find the people out there that are serious about trading, that are looking for community. And it is kind of more of a, it's not about scaling. Like, how do we find 100,000 people? It's no, how do you find the next 100 great people that you really just want to work with? And we go to these live events. These are great people. It's like, wow, this guy owns a printing business, and this guy does
Right.
this, and this lady over here has got this amazing place that she out in Italy. And so it is a cool way to meet cool people, and it's just doing almost products that attract that as well.
Mhm. Yeah, I think that is going to come back in a way that maybe it hasn't, um, in that businesses building community, having that kind of like texture of products that includes some kind of a live component, at least on the smaller side, like it may not be scalable, but it adds a level of stability, I think, to the business too. Because you build a culture of people who are like, this is part of their life, right? It's more than just an online product.
Yeah, and to me it's more sustainable and way more fulfilling than a churn and burn model. It's just like, all
Mhm.
right, it's just like you want it to be is you want it to, I personally, if I'm doing this, I want it to be fun. I want it to be like, I want to wake up excited. I want to wake up like, oh, good Lord, gotta, what are we doing today?
Right.
And that's always an important part of it too.
Yeah. So last big thing then, because you mentioned Tasty Trade and you have a PE firm as a partner. I would imagine at some point there's been conversations about the fact that like you guys probably could drive quite a bit into a broker, and you have broker partners. And so I would imagine that have you guys had conversations like that? Like, hey, we could be the like an acquisition from a broker, or acquiring a broker and becoming a broker and kind of merging those models. Have you had those kind of conversations and thoughts?
Yeah, we have nothing that's gone too serious, but I do think it's a perfect model of, somebody like, here we are like showing people how to trade, and they're trading on 20 different platforms. What if we were able to kind of like, let's just drive them all to this group over here, and we're just working more closely because we believe in their product and stuff like that. I think that's just such a logical step. But it is hard to find, who's the right partner for that. There's a lot of brokers out there, and it's something that you'd want, you want to make sure that that their platform's awesome and robust. Two, B, that you want to be able to, utilize your tools on it and things like that.
Mm-hmm.
And then C, it's not something that, is it a small broker where they've got, they're more starting out, but they're still figuring out their systems, or is it some huge broker? And I don't know, but I do think that that's a very like logical kind of next step. And, I guess
Mm-hmm.
in terms of, a place to find a home and everything like that too.
Yeah. Yeah. Cool. All right. Well, John, hey, I appreciate you coming and doing this. Like I said, I've wanted to talk to you on this for quite a while now. So you're awesome, and I'm really glad you could do it.
Well, yeah, and thanks to you for putting together. I mean, we've always, throughout the years, have learned just in your kind of the quarterly meetings you do and the events that you put together. It's just always great to be able to meet other people in the industry and kind of see what people are doing and stuff like that too. So thanks for, all you're doing in the
Thanks.
industry.
Thanks. I appreciate that. Thanks. And yeah, so hopefully we'll get you on here again for something else, or maybe one of our deep dives, or one of the marketing mastermind calls that we're going to be doing at FMS Pro. So again, thanks, John.
Yep, sounds good. Yeah, great to do it.